Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Bruno Sousa, head of US and Europe at Hashdex, to discuss why Bitcoin institutional interest will only increase going forward. Bruno, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. Pleasure to be here.
You got it. As we've seen with a number of new Bitcoin ETF filings, institutions remain interested in crypto and crypto investment. What do you think is continuing to keep their interest?
Yeah, I think the big thing, there was a big shakeup last year with everything that happened, FTX and so on and so forth. But this was one of those normal movements they have in an emerging market. And what's actually happening is a lot of maturity in the sector, evidenced by the Bitcoin filings, the Bitcoin ETF filings, but a lot more happening on the background. This is the type of things you don't see if you're not involved in the day-to-day things in crypto. But there were great advancements in the past 12 months in terms of infrastructure. And institutionals coming in with their own products is just a part of the story.
And when you think about the next 12 months, do you think the prospects are improving for a Bitcoin ETF for US investors?
Yeah, we think, this time it may finally come. I mean, the other day it was the 10th anniversary of the first filing in the US with the Winklevosses had filed in 2013. And, we have the Bitcoin futures ETFs trading there. Hashdex has one there. It's already, a mature asset class. We have ETPs and ETFs in several countries, Europe, Canada, Brazil, Hong Kong, different places in which investors can have access to that. And it's normal that it will come to the US. We think the winds are very favorable now. And hopefully, finally, this drama will be over and we can go to other new discussions around the market and products and things like that.
So the Bitcoin halving, right? It's expected in April or May 2024. Do you think that could potentially create positive upward pressure?
Yeah, we saw this in 2016, 2020. The halving happens every 4 years or so. And there is a trend in the previous 6 months or so, you start seeing a lot of price movement around that. So if you combine that with the prospects of the spot ETF being approved in the US, federal legislation being approved, we have two important bills, one in Congress, one in the Senate, and one in the House that have a very good chance of being approved, one of them at some point. This may all happen together in Q1, Q2 next year. So that would create enormous positive price pressure. And it's one of the things we're telling investors to watch out for and be very attentive because it can create a very bullish scenario for Bitcoin.
So, Bruno, do you think that this could potentially be a generational opportunity for investors?
Yeah, definitely. I think, in previous cycles in crypto and Bitcoin, there was still a lot of immaturity in the sector. What's happened now is that, those days are gone. Especially last year, cleaned up a lot of the actors that were in the sector. And you have the big boys coming in now, right? So after that happens, there's no turning back. And we're seeing the major financial players with different solutions from ETFs to direct trading. Several countries, large banks offer direct trading of crypto to their clients. It only moves forward. And in parallel, a lot of the projects that were funded in the past 4 or 5 years, they're now coming to prime time. So we're starting to see them being rolled out and the actual tech getting to people, which is what matters, right? Not only the price action on the two big assets.
And Bruno, I think that's a good point that you make when you see institutions like BlackRock and other large asset managers come into the Bitcoin space more profoundly. They don't move as quick as the retail investor may. I mean, it takes years and investment and setting up verticals within the organization to manage this new asset class. It just doesn't happen overnight. Yeah,
definitely. And the key thing is that the infrastructure is there. When we launched the first fund, this was 2018. A lot of the structure wasn't there. You would be hard pressed to find a fund administrator, for instance. It's completely different today. You have several serious large players in the sector that understand it, that can manage risk. That can present good solutions for institutions and things like, you saw in the BlackRock filing, they will use Coinbase for custody. It means that, Coinbase custody services are very high level. They've been working for several years. They're trustworthy. So these things that didn't exist in maybe 2016, 17, they're very real today. And that's when you see institutions being comfortable that you'll deliver to the client the variation of the price of the asset class, but not other underlying risk. It's just a market risk. And that's the logic of the ETFs and ETPs.
All right, Bruno, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thanks.